Bitcoin's importance is becoming evident through tangible changes in our financial system, from providing economic stability in struggling nations to reshaping investment portfolios in major economies. Bitcoin as financial lifeline and inflation hedge. Essential for financial inclusion. Bitcoin provides a crucial alternative in emerging economies. In regions like Africa, people and businesses use it and related stablecoins to make payments, protect against local currency devaluation, and send remittances cheaply, often where traditional banking is unreliable. A digital gold. With a fixed supply of 21 million coins, Bitcoin is increasingly seen as a store of value. Investors and institutions use it to hedge against inflation and the potential devaluation of government-issued currencies. Research from Grayscale highlights that as concerns over fiat currency risks rise, so does demand for scarce digital assets like Bitcoin.
A global tool during uncertainty. During geopolitical tensions, such as trade wars or regional conflicts, Bitcoin is gaining attention as a non-sovereign asset. Its borderless nature allows individuals and institutions to move value outside of traditional systems that can be subject to capital controls or manipulation. Integration into the mainstream economy. Institutional investment. A structural shift is underway, with major financial institutions, corporations, and sovereign wealth funds now investing. Bitcoin exchange-traded funds, or ETFs, have seen billions in net inflows, allowing investors to access Bitcoin through regulated markets. Everyday consumer use. Bitcoin use is expanding beyond investment. Millions of consumers now use crypto debit cards for daily purchases, and businesses from movie theaters to major retailers accept Bitcoin payments, often made seamless by payment processors. Major firms like PayPal have integrated cryptocurrencies into their platforms.
Regulatory recognition. The financial world is adapting. The U.S. has passed the Genius Act to regulate stablecoins, and there is an expectation of bipartisan crypto market structure legislation in 2026. These frameworks are providing the clarity needed for wider institutional adoption. Addressing challenges and looking ahead. Despite its promise, Bitcoin faces significant challenges. Volatility and energy use. Its price remains volatile compared to traditional assets, limiting its function as a day-to-day currency. Bitcoin mining's energy consumption is also a subject of ongoing debate, though there is a push toward using more renewable energy sources. Ongoing development. For broader adoption, improvements in scalability to process transactions faster and cheaper are needed. Many experts believe the underlying blockchain technology will become increasingly integrated into global financial infrastructure over the next decade. The debate on Bitcoin's ultimate role continues, but its practical impact on the global economy, by offering new forms of financial access, serving as an alternative store of value, and pushing innovation in payments, is a present-day reality.
Let's explore the two specific areas you mentioned, as they are two distinct ways Bitcoin interacts with the global economy. The search results provide strong information on institutional investing and very clear data on cross-border payments, with a focus on the technology that makes it practical. Area 1. Bitcoin as an institutional investment. Institutions like hedge funds, pension funds, and corporations are no longer on the sidelines. Their adoption is the key structural shift driving Bitcoin into mainstream finance. Core drivers for institutions. Portfolio diversification. Bitcoin is seen as a non-sovereign, decentralized global asset with a fixed supply, making it fundamentally different from traditional stocks and bonds. Hedge against fiat debasement. With concerns about high government debt and inflation, Bitcoin's programmatically scarce supply, capped at 21 million, appeals as a digital alternative to gold. Regulatory clarity. Major milestones like the approval of U.S. Bitcoin spot exchange traded funds or ETFs and laws like the Genius Act have provided the framework for institutions to invest with confidence. Impact and current market view. This institutional adoption is changing Bitcoin's market profile. Major asset managers note that buying has become steadier, driven by portfolio allocation rather than a retail speculation, which could lead to less extreme volatility over time. Despite recent price corrections, long-term institutional demand is seen as intact. How to gain exposure indirectly. If you're interested in this theme but don't want to buy Bitcoin directly, the market offers proxies. Bitcoin spot ETFs. These track Bitcoin's price and trade on traditional stock exchanges, e.g. iShares Bitcoin Trust, or equity proxies, stocks like MicroStrategy, MSTR, which holds a large Bitcoin treasury, often move in correlation with Bitcoin's price. Area 2. Bitcoin and blockchain in cross-border payments. For daily global transactions, the underlying blockchain technology is the game changer, often using stablecoins, digital currencies pegged to assets like the US dollar, for stability. How it beats traditional systems. Speed. Settles in minutes 24/7 versus 3 to 5 business days for bank wires. Cost. Dramatically lower fees by cutting out multiple intermediary banks. Access. Provides global financial access to businesses and individuals in regions with underdeveloped banking. Practical application for businesses. Companies use blockchain payment providers to pay international suppliers and contractors in minutes, accept customer payments globally, instantly converting to local currency. Access a global liquidity pool without needing pre-funded accounts in every country. The road ahead. The stablecoin market has grown from $5 billion to $305 billion in 5 years, with projections that they could handle 20% of global cross-border payments by 2030. Key insights at a glance. To summarize how Bitcoin applies in these two distinct areas, institutional investment acts as a strategic portfolio diversifier and a hedge accessed via ETFs or equity proxies, driven by store-of-value narrative. Cross-border payments, enabled by blockchain and stablecoins for fast, cheap, global transactions, driven by efficiency and access narrative.
Final perspective. These two applications show Bitcoin's dual nature, a speculative investment asset for portfolio strategy and the foundation for a practical utility technology reshaping global payments. The investment case is gaining validation from major financial players, while the payment revolution is already underway for forward-thinking businesses. If you're more curious about one area, like how to research Bitcoin ETFs or how a small business might set up crypto payments, I can provide more specific details.